D5 when we first started getting these kind of quote systems and online trading. I was in the mid 90s. I think I'm so old now, I can't even remember. But anyway, I've been using this for a long quote.com since the 90s. And it was the same layout, just had a couple different features with the alerts and stuff there was some really quick hotkey things that I liked. There were minor differences, but I just was so used to it that when I switched over, probably now if I switched over back to quote.com, I'd probably feel uncomfortable because I'm used to this one now.
Curious, Mark, just for a little history lesson, what were a lot of guys using prior to real-time charting? And I know you were like printing stuff off, but yeah, curious what you're using then.
Well, when I first started, I was using the newspaper. I was actually trading off the newspaper, and delayed quotes, and that was the first thing we had. So they were like 20, 30 minutes delayed. So it was really, quite archaic. But when I first got quotes, they barely worked. I had that little quote trek, and that was off of FM signal, and it was then I did have quotes. It was just all you had were just green. It was just basically this part right here where you would just get a list and you would get your bid and offer, and there was no charting. Then later on we got online access, and then you started getting charting, and I was using weekly charts from Daily Graphs as my screening, and I would just flip through the pages. As a matter of fact, those books, we usually show those books. Yeah, they're right here. I'll show you those books right here. I actually have, these are the books that they're broken down into the New York and some of you probably, know this, but these are the books right here. They're broken down into the New York and the NASDAQ. And then, and David Ryan and we'd love to go back to this. I'd rather have this than screening, to be honest with you, because this makes you have to do and see there's 4 charts on each page. And this is how we would screen. We just flip through and just look at the charts. So, and then, we just watch the quotes. And then when a stock hit the level that we wanted to purchase it at, we pick up the phone, call the broker. They would say, okay, we'll get back to you, hang up, and then call you back and let you know what your execution was. So it was a long time in between where you would know where your execution was, and the spreads were real wide. So there was a lot of risk because you could be buying a stock with a $3 spread, fast market, and it's breaking out, and then it turns back against you, and you hadn't even yet gotten the confirmation that you own it yet. You don't even know if you own it yet. So it was definitely much more difficult. Now trading is just so easy.
Mark, questions to both Marks. Do you ever do any trading pre-market or post-market?
I almost never. I don't do trading pre-market or post-market almost ever. Sometimes there's an earnings report and the stock gap's real big in after hours. I sometimes will use it to sell, but generally I'll give it till the next morning.
Same, exactly the same.
Any trading outside of the U.S., either with ETFs or ADRs?
I don't, but I think Mark does at times.
Yeah, very occasionally. But yeah, I would say 9, it's one out of 100, maybe even less. If I see something maybe like a power play in another time zone that has liquidity, I might play it or something like that. But the other thing, I like to sleep, guys. So, if it's the markets are stressful enough here in the US, so I'll just keep it here. That's kind of how I do it.
Yeah. Real quick on MarketSmith. So the easiest way to screen, to find stocks that are potential leaders is just to run a screen where you have, this is really just my main screen, is that I'm just running relative strength, and you can put a cutoff. I have it at 89. I'm usually looking at 89 and above. Current price, $10. 25% off the highs, the maximum I would want to go. That's actually, I'm almost never buying a stock 25% off the high, usually 15 maybe off of a low cheat. No closed-end funds, ETFs, and trading 100,000 shares a day. That brings me to 539 names. So that gives me, and then from there, I just sort them into relative strength. And then if you just hit the space bar on MarketSmith, you can go through those. I'm sure we'll go through this with Scott Sinclair. And now I'm just looking at the charts with my eye and looking at the strongest to the weakest within that range. This will get you in the direction of almost all these stocks will be in stage 2 uptrends. But if you want to make absolutely certain, or you can run even a separate screen, here's the trend template, and I'll show you how you can do that. So there's a couple ways, and I gotta open this up a little bit. If you just go to stock ideas right here, and you go to weekly review right here, right below O'Neill is Minervini trend template, and if you hit that, and that goes down the bottom here. So I gotta open that up for a second, show you right here. You can see the screens and you can just click on those. But let me show you another way that I do it, or you can do it. You can make a screen, you put a new screen, and then over here, where you're screening from, the database, like if you put this right here, this is from, it comes up, Market Smith database. See, this is of 9,697 stocks. But if I go to the trend template, what I did is I made it right here. You can go right here and you can decide what you're screening from. What is your beginning database? So this is a screen where 89 and above, 50,000 or more, current price above $12, but they all have to meet the trend template. So now this brings it down to 197 names. These are all names that will be in a confirmed stage 2 uptrend. And then here is the 1 month, where again, this is just the same criteria, just from the 1 month trend template. Now that brings it down to 50 names. And then I'm putting them in relative strength order. So I'm going to see the strongest first. And then here I'm going to screen down and go through them. And I want to see, I want to look at the strongest stocks. Those are the ones I'm going to prioritize. So that's 98% of my screening. It's that simple. Then I will, if we're in a correction, a bear market, particularly if we're in a bear market and when we're trading down by the lows, I run a RS new high, and that will give me stocks that are trading with their RS lines hitting new highs. Also, if I want to single out a group, this is a way here where I'll show you. You can just set it up. This is $10 ETFs, 50,000 shares or more in the solar group. So now this brings up 12 stocks, and then I put them in relative strength order. If I do that, you can't see the bottom here, but it's just a list of names. There's 12 names. So FSLR for solar comes up first. That's the strongest stock. As I go down, ARRY, 98 relative strength. We go to ENPH, 98. And as you go down, you'll see the charts get worse and worse. and as you go down, there are stocks that I wouldn't buy. And you can see when the earnings dates are coming and so forth on the chart. So this is a way to just look at a specific group. If we want to look at a specific group, see what's setting up in that group. And I do have some of you that want to have everything covered. You can certainly put a screen together like this. This is what I call the techno fundamental screen. This has got a bunch of stuff in it, but again, is nothing magical about it. You're going to see the exact same names. Like there's all overlap. The only you're going to see if you run this RS screen, this is sort of the net that grabs everything. So I would rather run this and then just look at the fundamentals, because if I run a fundamental screen, I'm going to knock out the biotechs. I'm going to knock out stocks that I might want to buy, and I won't see them. So here's the thing about screening: if you put 100, say you come up with the perfect screen, and there's 100 variables, if it misses on just one, you won't see the stock. It would have to meet all 100. That's why you don't want to, the mistake that people make with screening is they try to put too much criteria in it. It's better to put less criteria, run a couple different screens, and sort of slice the market up in different ways. So what I do is I slice it up into the relative strength and then the IPOs, which that you won't have the stage 2 uptrend, and the relative strength sometimes won't be there as high. So now the IPOs, I run that screen, there's 107 IPOs. Watch this. I put them in IPO order. You can put it in IPO date. So if you put them in IPO date, what will happen is the newest IPOs will come up first that meet your criteria. And then as you click through them, you'll see they'll just elongate, and it'll get longer and longer. And you'll go through all the IPOs from the most recent developed to the longer. And I just put it a year back. So I'm looking at all the IPOs that came out within the last year. I'll show you what that looks like. See, it's just IPO date. This one's actually 2021 on. Current price $12. Our RS rating 25. So that's, looking at virtually everything. Okay. Let's see here. Any questions on screening?
There's a lot of questions, but
I'm sure there's tons of questions.
do you have your alerts set for after hours so that it will trigger if some news, event is affecting your stock price after hours?
I do not.
Biggest question seems to be when buying a stock, are you using a market order or limit order?
Usually using a market order. It depends though. Of course, depends on the situation, but usually I'm buying in block and I'm breaking my order up into blocks and buying it at market.
All right. All right.
So it's 922. And I think the stock that's set up the tightest right now is this ADM, which is in the agricultural area. It looks like it's set to gap up a little bit here. Let's see, what's the XLE doing? Just want to see. So XLE looks like, just zoom out a little bit here. Looks like it's coming under some pressure here. So closed around this 91 change, looking at 89.76, which is around the low here. It's still within the range, staying inside. And the market, I don't even know what the market's going to do here. Let's see.
Market, I think it's down about 40 points.
Okay, so market's down about 40. Again, I am really focused on the stocks. I don't focus on the index as much. Usually I just minimize this and I watch my stocks. But I want to know, of course, what's going on with the market. I've got CNBC on right now just to see pre-market what's happening. But I'm focusing on the stocks. I mean, this what's guiding me is this list right here, my focus list, my on deck current holdings or stocks that I may be just watching, my buy list. That's what is determining what I do. It wouldn't matter if the Dow was down 300 points and was gapping down today. If stocks were setting up and they were breaking out, I'm gonna probably buy them. I'm gonna buy something. I'm really 99% of everything that I do is the catalyst is the stock itself, the individual stocks. Even my overall market calls and opinion of the overall market and buy and sell signals are highly dominated by the individual stocks. We do have the risk model that I've put together that we've been reporting to our members for the past decade or so. That's done a really great job of keeping us on the right side of the market. But the components in it are new highs and new lows, up, down volume. One component of it is the general market, basically the O'Neill follow-through date distribution strategy, just a little bit permutated a little bit differently, or actually it's closer to the older way that O'Neill did it. They changed it in IVD, and then the individual stocks. So, but then we also have what you call the STEM models, stock trading environment model, and that's based purely on just how the individual stocks are acting. And right now, that's on. We have red, orange, or green, and it's on red right now, which means it's a very risky environment, and there's not much that's working. So we're in a very cautious mode right now.
Real quick, guys, I just want you to be able to appreciate something. When I first saw Mark trading, and you see my office, and even though this is not my real office, this is just a background, but I actually do have like 10 monitors in front of me. This screen is really all that Mark is operating off of. As successful as he is, as accomplished as he is, he's primarily focusing on this one screen, just flipping through the stocks, staying alert, staying on top of them, screening through them. And it's amazing just how simple it can be. You don't need a lot of fancy stuff and a lot of, whatever is going on to become a successful trader. It really is something. Keeping it as simple as you can is what Mark has perfected, is what I would say.
I manage tens of millions of dollars and take as much as a $10 million position with what you're seeing right here. This is it in one screen of my order entry. So, all these, like, again, all these indicators, all these things, these screens and everything, it's all about knowing, uh, having skill, the skill to read the chart and to use this information and really boiling it down to what actually works. And then, that's why I love sports where, like tennis, two guys go on a court, they got a racket in their hands, a racket and a ball, it's pure skill, whoever can, wield that racket the best, or, same thing with this, it really, all these indicators and all these things that you find and read about and that are advertised, it's all just an offshoot of the price and volume itself, and it can never really, if the caboose is being pulled by the train, if MACD and stochastics and all these indicators are being calculated by this price, well, then they can only be coincident or lagging. They can never lead. So why not? This is something that Bill O'Neill convinced me of, is that all you need is learn how to read bar charts. The reason why, a lot of people use all these other elements is because, and they're not successful with something simple because they don't have the skill. So over this last 4 days of curriculum, I gave you everything to develop that skill and what to look for. Certainly there's other ways of trading. Mine isn't the only way. There's some people who use overbought, oversold indicators and have all these squiggly lines all over their screen. They got 14 screens and they make it work. They make money. But I can tell you this, when I got interviewed for Market Wizards with Jack Schwager, one of the problems that Jack Schwager had, and even more recently, and he said it several times, I've heard him, and he told me personally, his biggest problem was finding 10 or 12 people out of the whole world that had the type of performance like myself, or Paul Tudor Jones, or some Stevie Cohen, and some William O'Neill. Said that the big problem was finding there's so few of those people. All the ones that I know, and I know a lot of them personally, that I talk to, a number of the market wizards are very close friends of mine that I talk to all the time. Everybody's got real simple approaches. I haven't seen too many of them that are really have complex approaches. Even if they're doing strategies different than mine, that usually they boil it down to something that's a lot of not a lot of moving parts. I think that's the beauty and essence of the the art form part of this.
All right, guys, so we have the opening bell
2
coming up
minutes
here
for
in
the
just
opening.
another moment or so.
And Bob, as we're going intraday, as the charts develop, because we'll need to let a little bit of time go by to
Yep.
let some charts develop. But if you see anything intraday, you can certainly point it out. I can bring it up, because these techniques that we've gone over, they work on any time frame. So, and we do have, I do have friends, and we have members and clients that use them intraday very successfully. I don't use the intraday charts. I trade off of the dailies.
Well, if you want to pull up EMPH, Mark, it was on intraday having a nice low cheat pullback buy, but didn't like the big volume on the close there.
You're saying right here?
Yeah.
Yeah. And now we're coming off a bit in pre-market. So let's
Yeah,
see.
exactly. So that's gonna kind of negate some of these energy solar names seem to be down this morning.
All right, here we go. So we're opening up here. So this is opening up down a little bit. So here's where what I'll do is I'll just sort all my lists in percentage change for the day, so I can see what's down, what's opening up. So right here, I immediately see what's going on here. All right, I'm interested in the CVI. It's opening down 3%. So let's take a look at that. So this is opening relatively quietly because it's staying inside here. So this is a potential buy. So we'll keep an eye on that. Let's see what else. This ADM, very quiet open. I love this. I love the quiet open here. This is one that definitely would be the, now with it being real quiet here and being so close to this pivot, I right away would, I right away would put this on my screen on my trading platform and set it up. So I would set this up so, I'm ready to go if I want to buy it. So that's ready to go. I can literally fire it off an order here now, in a moment's notice in just a second here and buy that if it starts moving. So, but it's going to hit that alert, and at least it'll let me know if it's moving in my direction. So I don't want to buy a stock unless it's moving in my direction. Even if I'm buying a pullback or I'm coming off of this low cheat, I want to see it at least some progression in my direction. Because again, if it's going in the opposite direction, they start opening that spread. Next thing you know, I'm at a loss. I'm trying to be at a profit immediately. So hopefully we'll get an opportunity to do that. REGN, again, opened up quietly here. So with it opening up quiet above this previous day, you've got this little, if you want to call it a low cheat, a little pullback buy. Again, I would definitely not get too aggressive here, but we could buy some above that 745.40. Let's add, let's just put in 745.40. So I got that alert right there. We'll keep an eye on that one. Let's see, PRTA, another one real quiet here. Again, this would be a little pullback buy. So you're going inside here. I'd be really really careful with this one and only buy a small position. But if this starts turning up here, you could buy it from this pullback buy. Again, we don't have many stocks that are setting up real crisp low cheats or handle entries where you've got the pivot and their breakouts. We've got a bunch of pullbacks here. So this means that again, we're a little more risky here. There's not a whole lot that's setting up for real crisp breakouts. I don't know. How about you, Mark? You seen anything? AZO's up 1%. So
Yeah,
AZO is actually turning up.
yeah, that one, that's one.
You could buy this. I mean, this, this is one that, of course, here I want to buy it coming out of this base right here. This is the buy point, but it gapped. This is one of the reasons why I've been watching this for a while. This right here, it did gap up, and that kept me away from it. But it had a nice 4 or 5 out of 6 days up or so, 4 out of 6 days up here. Natural reaction, just pulling back here, and now you're turning up from that natural reaction. I know we had a lot of questions. Can you buy the natural reaction? Well, yeah, but you're paying up a bit now, right? You're around here buying it on this breakout. Now you're paying up a bit. So yeah, I mean, you could definitely you could buy it here, but optimally I want to buy it over here, and that's what Mark said. Why didn't you see it before? Well, I did see it, this one, but it gapped and it kept me away from it.
Mark, how do you determine, or when are you determining as well if you're going to be buying a quarter, half, or a full size position?
Yeah, that's a judgment call, and again, if and that depends on the market environment. It more depends on, my own traction in the market of if things are going well.
I got an alarm on DGII going off here too. That one's
DGII. Yeah.
All
Yeah,
right.
so that's starting to try to come out here, and this would be a very now again. Let's just say this isn't the most perfect setup. It is one that's been just stepping up here. This is one that maybe if you want to try to get it dead right, starts coming out here. You set a stop at the low, real or maybe the previous day a low, starting to break out here, and so let's just say. What's the low here? 41.50. So, if I buy 1,000 shares here and I get in here around 42 change, my risk is $600, $700, $800 per 1,000 shares. Let me just see here. Let's look at the spread here. So yeah, trading at 42.01 by 16 cents. Now a lot of these breakouts are turning right around on us. So just keep that in mind. You got to be real careful here. That's why I'm saying keep it on a real short leash. But this is probably the best acting stock right now out of everything we have on the list. TH is up about 4% here. How's that looking? And that's turning up. I would say DGII is probably the best looking name right now. The way it's acting right here, and it's breaking out of a little tight area.
Mark, question, if the spread, if that spread is wide, or what would be considered too wide, or is there a limit to how wide of a spread you'll buy a stock?
It's all your own tolerance. I mean, you have to decide how much you're buying. If I'm buying 50,000 shares, it's a 2-point spread. I'm not going to be at $100,000 loss, no matter how rich I am, or no matter what the stock chart looks like. I'm not going to put myself at 100K loss immediately. So that, for me, that would be too wide. For someone else, it might be a $2,000, and you would have to position size accordingly. So that's part of it. But sometimes the best names are going to have wider spreads, and that's certainly a risk. Now, again, if that spread is 0.5% or 1%, your stop's 8%. Obviously, that's not really a deterrent. So it depends. Like I said, there is, for me, there is a dollar amount, that I'm cognizant of, that I'm not going to want to risk sometimes. And it also depends. If I'm doing great and I've made tons of money, there's times where, I'm up $1 million in a month, and I've got a lot, I've done really well. There's other times where, I can't get anything to work. I mean, this year I had a lot of trades working for me the first half of the year, short-term trades, taking partial positions off into strength, and then this last couple of months I haven't been able to get any traction whatsoever. So I would be really, really careful at this point right now. It's really, anything with risk is, I could tell you, looking at the charts and sort of what the volatility, single digit getting into the pivots and so forth, on how stocks generally act. But risk, as far as how much risk you're going to take and how much dollar loss you're going to accept, is completely a personal decision. And that's, would be handled through position sizing. See here. Yeah, so far this one's acting, DJI is acting pretty good. The CVI is off about 4% now. ADM still staying pretty tight. Market's down here. You got the Dow up a little bit now, so it's actually turning around. But this MAC is staying really, really tight. That's what we want to see. Let's see. So the ENPH is down a bit here. So coming in now, see, here's a perfect example of a stock that, it breaks out here, and it's coming back in here. And this is where, after you get a squat like this will usually shake out a lot of people, a lot of shorter term traders, a lot of amateurs. And this is where, and again, if your stop is set at the day's low or something, then fine, you're out if you're really short-term oriented. But if you're going to swing trade and give the stocks a little bit of room, this would be too quick to sell out, most likely. And again, this is where the rubber meets the road. You got to see if it can tighten up, because if this can hold up here and tighten up a bit more, let's just say it holds today and then it comes inside. Whoops, wrong line. Comes inside for a day or so, and starts tightening up, and maybe you get something like this. And now that actually got better. This could improve quite a bit. And now you'd get a breakout from an even tighter level. Hopefully the volume will come way down, and you'll take out that reversal, which would be a 1, 2, 3, 4. It would be a 5-day reversal recovery, and you would take out all the supply at one time. So that's what I would look for. And if I was in the name and maybe I was small, then I would add here, or take an initial position. But just because, let's just say, even the stock stops you out, and you've got to stop, that's tight here, it stops you out. Well, you can re-enter it, if it tightens up here, because then it would just be still part of this VCP process. So right here, here's your first, right? It's down about 20, so we'll call it 27%. Right here comes about 17. Okay, peak to trough right here. You're off about 9 or 10. right here, off a little bit more, maybe 6 or 7, and now this would be even tighter. That would be like a 5, right? So you've 1, 2, 3, 4, you get a 5T. That's what you want to see. You want to see it get tighter and tighter and tighter. So just because it stopped you out doesn't mean that it can't reset on you. Just get that on there. And you want to keep an eye on it, especially in a group like the solar group is, these stocks are some of the strongest stocks in the market right now. But FSLR is definitely acting the best out of that group right now. Let's see here. So DGII is handling this little breakout so far, holding up, squatting a bit. And this is what's been happening over and over and over. You get these stocks, they move into new high ground and they just come right in. Retail buying brings them out, institutions sell into it, and there's no bids. There's nothing to hold it up. And that's what you're always trying to gauge. When the breakouts start working, they just come out, they take off, and then you're sitting there on the launch pad just watching these rockets take off left and right. And that's when we'll get aggressive. Until that happens, though, we're very careful, and we might even just watch a bunch of pitches come across the plate. Like this right here in a really strong market. I'd be buying this. I'd be buying this in size. Even though maybe it's not, it's moving itself up here and it's not coming out of a big base, a little bit extended, but I'd be buying these high momentum names that are breaking out to new highs. Let's see what else. Texas Roadhouse. This is one too that's trying to tighten up here, just staying tight. Bob, any questions? I think you're talking on the phone though.
Yeah. Question. A lot of ticker symbols, which we will get to being able to look at. I don't know if you want to take any ticker symbols right now, Mark, but
let's take some ticker symbols. Anybody have anything that they think is set up right now?
Flex.
Yeah. I have Flex on my on deck right here. Yeah, I mean, again, this is an early turn. See, it's only up for a little bit here. It's a big base. Let's go out here. So yeah, you do have a really big base here. And as I pointed out, when you get the really large bases, sometimes that will cause the long-term moving averages to flatten out or even start trending down. So then when you come out of the base, it's an early turn. So you got it. That's sort of a caveat. You have to look, if you have a real long base, you may be able to cut it a little bit of slack on the uptrend because you have had a long period of consolidation. This is kind of wedged up a bit here. It's a little bit sloppy. I just don't. This doesn't have the orderly type of price action that I would buy here. See, it came out this morning already. You're getting duped. It comes out. It came right up to the old highs. I don't think it actually 2050. Where did it trade? 2050. Yeah, came right to that 2050. Pulled back here. So that's not one that I would. I do have it on deck, as you can see right here. But
ALNY mark is taken out Friday's high. Is it
ALNY? Yeah, that's got that low cheat. Or that cheat area, that actually looks pretty good. That's a pretty good looking. Let's see. I think I'd want to see it confirm a little bit more. So down to this low is about 10-11% below the pivot here. You do have the 50-day. That's what I call an angle warning. When you got the price going in the opposite direction of the 50-day coming out of a base, it's minor. It's not downtrending too much. So that's a minor angle warning. If this was really steep, if this 50-day was like that, and the price was coming out, that would be a warning. You got to be careful, because until the intermediate trend starts flattening out and turning up, you're going against the trend. You want all the trends to be in your favor. The long-term trend template, stage 2 uptrend, the intermediate term, and even the short term, you want it that day to be moving in your direction. You want all the trends going in your direction. This could come out here. This could also very easily stall out here, or even poke its head out a little bit, and then spend a little bit more time, similar to the ENPH, and maybe just tighten up a bit more, and then it comes out. And see, that would actually look even better, right? That would tighten up a bit more, and you'd get that next iteration. So this could be part, you don't know, you're not going to know until in hindsight. So you've got to make a decision if you're going to buy it. Now, in a good market, Now I'm not waiting, I'm buying the stock. It comes out here, I'm buying as long as that, this right here, that's about 6%. That's within single digits. I'm buying this as soon as it takes out these highs right across here. You can see if you go across the whole base, it only traded above that level on maybe, I don't know, 10 or 12 days. It only closed above it on maybe 7 or 8. And that applies to the left. It is a bit early turn, but you have this explosion here. So this was a potential, let's see here, go back 8 weeks or so. This was close to a power play, very, very potential power play, but it didn't hold up. And now it needed to form a bigger base. So this is looking pretty good here. Take this out there. I'm going to put this over here as a potential and move this up to here. So the 2, and we had DGII, of course, which is up about 3% now, acting pretty good, holding up. And you see with this platform, I can very quickly just move stocks around. That's what I like about this. I can move them from this table over here and just jockey them around. It's very, very easy to use, very quick. I'm sure there's other platforms that do this too. ADM though, so you're trading down here a bit, still holding up, but this is one that I would look to buy only if it, at the very least, would have to take out Friday's high. I want to see it get going here and start moving, through this pivot point. That would be at the very least. I would not buy unless it can at least take out yesterday's high. So that's what we would wait for there. And ALNY again, starting to come on a little bit here. This is one where what do we got? We got a spread, 219.78. So you got a little. It's a little bit of spready, but it is a $200 stock. Oops, sorry about that. Just drop my pad. Let's see. I like the way this looks. Now we could bring up a Market Smith to look at it here. Whoops. And 96 relative strength had earnings here. Of course, this is a biotech. You can see no earnings, all losses. Biotechs will generally have profit margins, and they get a blockbuster drug or something. They can have, billions of dollars in sales and have profit margins of 80%. You can see here the margins 80%. So that's what makes them so powerful, potential big movers. See, I'm going to put this up on my order entry here, just watching it. Mark, you interested in anything?
I'm watching this ALNY a little bit.
Yeah.
And honestly, I like the way everything's open right now. Now it's just more, can these stocks, stay quiet and then go higher?
Yeah.
Our question, people, can you just describe what you mean by staying quiet? Stock acting quiet.
Just not much price action. Just opening up quiet means it doesn't open up on a big gap up or down. Volume is relatively low. You can see we've got really no volume here in the morning here. You can see even here, if you're looking at it intraday, if you want to look at volume, one thing that a 5-minute or an intraday chart is good for is ascertaining how the volume is running. I know we had questions about the volume at the particular time because you don't have the end of the day volume yet to know if the volume is up. You can look intraday and see how the volume is running. And that's what basically you want to see as the stock's moving. If you see blocks coming in and the volume is strong, this stock's holding up, pretty good here. Like I said, this is definitely buyable in this market, though. We've got so many names that stick their head out and they come right back. So I would be, I'm in the stage of trading right now with in the market in this market environment where it's all about test positions right now. It's not even really about making any big money, and it's about if I'm gonna make any money and chip up, like even if I bought 1,000 shares of this and I make 10% on it or something. Okay, well then I've got that money now to finance some bigger risk. I don't want to go into that principle. That's the main thing. That's rule number one is to try to protect that principal, because you don't want to be digging out of a hole, right? Losses work geometrically against you. So getting that traction and financing larger trades. To take bigger positions, I want to have some traction under my belt. Now I'm already up for the year. I actually have profits, but that money's mine.